Did you hear her? Okay, we just unmuted it.
It's unmuted. 1, 2, 3.
Do you
1,
hear?
2, 3.
Can you hear anything?
There is a little phone icon in the top left, and it looks like a little red button underneath it.
They're good. Good.
Would it come from that speaker?
I don't know.
Good morning, everyone. We ready? Let's try again. Good morning. Good morning. That's much better. It's so nice to have all of you here in the Kansas City Fed today joining us for a wonderful event, our Small Business Lender Summit. My name is Erica Ramirez, and I'm the Community Affairs Officer and Assistant Vice President here for the Kansas City Fed. And I'm just so pleased to have all of you joining us, as well as want to also welcome all of you who are joining us via live stream. So we do have individuals from over 20 states joining us via the live stream. So we're really looking for opportunities to expand our reach and bring really relevant information to all of the stakeholders and bankers. And we encourage everyone to also go back, tell your colleagues, as today's program will be made available on our website after the program. So the community development function here at the Kansas City Fed is really committed to assisting stakeholders and all of the communities within our region and those that we serve to identify and effectively tackle emerging challenges through the use of research, relationship building, and resource development. And today we're here to discuss one of these issues that we continue to hear about, and that's really the challenges being faced by small businesses around the country, both in urban and rural areas, with regards to access to capital. And so, as a regulator and partner with many banks and financial institutions, we also hear from many of you in this room, many bankers, loan officers, and other bank executives about your interest in learning more about lending enhancement programs and how you can continue to find opportunities to bring together the access and to capital that many small business owners need, as well as creating an opportunity for everyone to continue to maintain your customer base as banks and also hopefully grow your banks. And so today's summit is designed to increase your knowledge about federal and state credit enhancement programs, as well as how to navigate the benefits of these programs as you assist your small business customers. And so today's speakers and the institutions that they represent, along with the numerous resources that are available outside and that you'll learn about today, are really going to hopefully provide you with new information and give you an opportunity to develop some new partnerships, some new practices, and hopefully some new innovative methods of lending to really help small businesses. And so as we think about the small businesses, it's really imperative that small businesses have the opportunity to access lending and capital, because it's really the heart of these small businesses that help to strengthen our communities, but also help to create jobs, which is something that all of us who are participating in this summit I know are very interested in. And so I encourage everyone today to ask questions. So hopefully none of you should leave here with any questions about today's programs, but if you do have questions, hopefully you've been able to make contacts with many of the institutions whom are here today that can be that contact for you. And for those of you joining us via live stream, we also encourage you to engage and ask us questions. And so before we begin today's program, I'd really like to take the opportunity to thank our partners. So we've partnered with the Office of the Comptroller of the Currency, as well as the Federal Deposit Insurance Corporation, to bring together today's program. And we're so pleased to have speakers from various organizations joining us today. I'd particularly like to thank the Small Business Administration, as well as the USDA Rural Development Business Programs and the State Small Business Credit Initiatives. And additionally, you will have the opportunity to hear today from financial institutions, community banks, and other organizations that are partnering with many larger sized and community-based financial institutions to bring together these programs and lend new capital to small businesses. And so with that, I want to thank you all so much for joining us today. I hope that you have a wonderful opportunity to make some new connections and some contacts. And so with that, I would like to invite R.L. Cisneros to the stage, who will be moderating our first panel. So thank you all so much.
up on microphones here. Welcome. All right, we'll switch that on. All right, well, good morning, everyone. Glad to have everybody here. Erica, thank you so much for those remarks in getting us started as far as this Lender Small Business Summit. Let me cover just a few housekeeping items before we get into the program. Please, we are streaming today's event, so a lot of sounds will carry. So if you wouldn't mind putting your cell phones on vibrate, actually that's a good reminder for myself as well, as I have my telephone on. So put those on vibrate, please. So as Erica said, we are reaching 20 states today, so small business lenders from throughout the country, from coast to coast. And also all of you here in the audience. So happy to have you here. We're going to be taking questions from the audience. We want to make sure that this is an interactive session. So we want to make sure we've built in a lot of opportunity for those questions. We're also going to have microphone runners with the streaming in mind. So I have some colleagues from the Federal Reserve, the FDIC, and the OCC that are going to have microphones available. So when you have a question during your session, if you wouldn't mind raising your hand, and we'll make sure we get a microphone to you, that'll make it easier for the streaming audience to hear the questions that are out there. So we want to make sure that we're covering that. Also, for our regulatory panel, if you look inside your pocket folder, there's a 3x5 card in each of the folders. So sometimes folks prefer a little bit of anonymity, so we'll be using that during the lunchtime presentation as far as the regulatory panel. So as you're thinking of questions, please jot those down, 1 or 2 questions per card, what have you. And then we'll be collecting those during the lunchtime because, again, we want to make sure that we're hearing from you as far as what are some of your concerns that you'd like to have addressed. All right, let's see. Want to make sure. So I think we've covered some of the housekeeping. Also, for the streamers in the streamers that are going to be joining us, you basically have the comment button. So basically, click on that button, and you can submit your questions. And one of my colleagues will basically be assisting us as far as to make sure that we're taking those questions from the streaming audience as well. So again, whether you're in person here in Kansas City or joining us live via the stream, we'll be able to take care of those questions and concerns as far as the programs and what you're hearing. So again, so our first panel today, we have 2 national leaders in the small business space. Lillian Salerno, Administrator, Business and Cooperative Programs, USDA for Rural Development. Thank you so much. Many years, not as a small business owner, but also recently, 2013, with USDA, but brings a wealth of information and perspective as far as rural communities, rural business, and the challenges and the opportunities that are there for those businesses, and the relationship certainly with financial institutions, community banks and larger banks, what have you, in relation to the funding resources. And joining us via live stream, via video at the Board of Governors, we have Linda Ruschi. Thank you so much, Linda, for joining us via stream. Sounds like we've got a good connection as far as sound. Terrific.
I think we do.
All right, great. And Linda is the Director of Financial Assistance Capital Access for the SBA, and joining us at our office at the Board of Governors in D.C. I'd like to thank our colleagues there at the board for helping us, and also thank SBA for joining us this morning. Thank you both for joining us. Now, to get the panel started, I've asked both of the presenters, Lillian and Linda, to start off with 10 to 12 minutes, 13 minutes, what have you, of comments in regards to kind of a broad overview in regards to their organization and more of the products, the lending enhancements that some of you have used, and some of you perhaps may not have used, so that you're aware of the resources that are out there that USDA RD has available, and also that SBA has available. But let me just, show of hands, how many are using, of the lenders, USDA RD products? Show of hands, maybe a quarter? Okay, quarter of the room. How about SBA products? About half the room. So Linda, about half the room. So there's some opportunity here is the way I look at it. Great. How many of you have heard of SSBCI? All right, well, some of you don't count. I mean, some of you guys are part of the program. So, all right, so good. So an opportunity there. How about CDFIs? Is that term familiar? Micro-lending organizations? Okay, again. So again, I see some opportunities here, and that's what this program today is trying to do, is basically, if you're not familiar with it, to give you the information to see, okay, here are some opportunities for us, for our organization, our lending institution, to assist the small businesses that are in our market. And so when it doesn't work for you as far as conventional portfolio product, that there might be some opportunities to consider, where USDA may fit, or SBA, or SSBCI, or some other resources that are out there. So good. So, all right, all of you that raised hands. So actually, there were quite a few of you that also did not raise your hands to either. So SBA or rural development. So I believe that that's the part of the audience that is looking to say, okay, help me with another tool. Give me another tool in my toolbox so that I can assist small businesses. So I see a lot of opportunity. There's a lot of upside here. So why don't we go ahead and get started. So Lillian, we have a PowerPoint presentation up. And let me just remind everybody. So on our website where you basically registered and so forth through the link, so the Small Business Lenders Summit, we have all the materials that are covered today. So you have the PowerPoints, you have the bios for each of the presenters. You basically also have some resource links that are out there. So again, the effort is that you have all the resources that you need. And this is an effort, again, to, as many of you have attended conferences and events, of going green, trying to reduce the number of copies that are produced and so forth. So you have access to all of that information. Also, as Erica mentioned, we are, along with YouTube, this is also being filmed, so it will be on our website post-event. So if there was something that you missed and said, oh gosh, did Lillian really say,
Please.
This? No. You can go back to it and say, yes, and here's an opportunity for our institution. So you can go back to the information and use that. So why don't we go ahead with the PowerPoint presentation, and with Lillian, thank you so much for being here again.
Certainly.
And we've got the clicker, so you're in command here.
Okay.
And it's basically the right button and confidence monitor here.
Great.
And as I said, for everybody that's streaming, you have access to this on the resources on the site with resources. So, Lillian.
Thank you. Thank you. Good morning, everyone. And just really wanted to say shout out to inviting me and giving me an opportunity to speak about our programs. I wanted to just give you a little bit of my background. Is I am that job creator entrepreneur that grew up in a small town and started a company in a small town in the 90s. And I remember and still have the sharp pain of trying to get money back then. And part of our issue was being in a small town. It was in rural Texas. Everybody sort of wanted to throw us into the Dallas marketplace and kept trying to get us to get our money from Dallas. And we were very wanting to work with community banks, and eventually worked with the community bank, where we wanted to make sure sort of the money stayed in the town as it grew. And so I just putting that out there as my bias is I'm not a banker, I'm a job creator. And when I wake up every day, I don't wake up as a Obama administration appointee, which I am, and I'm proud to be. I wake up as a job creator. So I'm very happy to be here because I wanted to take this opportunity to see if some of you all could help us in our quest to make sure that rural America becomes the vibrant place it needs to be to make the country work, because we've been informed by folks who keep statistics and stuff that it's in real trouble. And part of that is about capital. And so our Secretary Vilsack, who was a former governor of Iowa for 2 terms, has been relentless in his pursuit to find ways to get capital to rural America. So I wanted to spend my time that way. And the reason I normally don't do PowerPoint presentations because I sort of just talk, but I wanted to make sure the folks that are seeing it from their computers had a way to go back and look at this. I also wanted to thank my colleague over at SBA. We work jointly together. We've tried to be very diligent in making sure the silos don't exist in the federal government, which is a very hard thing to do. And so we don't compete on loans. In fact, we do joint deals all the time. And so I'll go through our programs and you'll see some of the differences. I have to say, as a rural small business person, I didn't know about the USDA rural business opportunities when I started. I got an SBA loan. But had I thought about it, had I known about it back in the 90s, we were in a small town of less than, I guess, 4,000 people at the time. And it would have been a good product to know about, nor did my banker know about it. So I'm really happy that Ariel asked the question of how many people knew about the program, because I do a lot of lender roundtables. Many times nobody knows about the program. So part of that's because of who we are. So I just wanted to go through who we are and what we can do to help you all know more about our program. So first, one thing that happened this year, which was very positive, was the passage of the Farm Bill earlier this year, which gave us authorities to, on our research title, which includes energy, where we have authorities to loan money. So we're a bank. I mean, our rural development mission area, we have a $200 billion asset bank, right? And so when I came over to USDA back in 2012, I thought I was going to come and get to do business and skills training, and I thought that was my job, but really I have an almost $11 billion loan guarantees in my little division, and I should be spending more time talking to bankers, and instead I'm usually talking to businesses because that's where my strengths are, I would say. So my weakness is part of the reason we haven't spoken to you. So I apologize for that and hope that we can get in front of these kind of crowds more, because you're the ones who can unlock the capital for rural America. So as part of the Farm Bill, it gave us authority to loan money for energy programs, loan money under the business and industry program, and basically just sort of help with those small towns. So the rural development mission area that I work in, called rural development, is basically for those small towns USA. So if you think about it, I bet many of you have grown up in small towns. If you think about the infrastructure of a small town, we're the only federal piece of the government that sole mission is to make sure small towns, those towns under 50,000 people, have opportunities to create and thrive, make those communities thrive. So we give electric loans, we have broadband loans, we have renewable energy loans, we have housing loans. And so just so you know where we are, you may have not heard about us because you don't service those towns, but so the eligibility requirement is that it's in a small town, right? So it's not, if we have a business that comes from a city-centric or urban area, they can't participate in our loan. And so just so you know the numbers, so for business and industry under fiscal year 14, we did $1 billion. So we don't have the kind of funds that SBA does. We have a little bit of a different piece of the market that we serve, and our estimated 15 funding is $1 billion. Again, that's on our business and industry guaranteed loan program. And then for our Rural Energy for America program, when you think about Rural Energy for America, this is, most of much of it is agriculture. That's why it hails in our department, is this opportunity to turn agricultural waste and things into energy, just to give, really exciting things in energy. So we had $53 million in obligations, and because of the Farm Bill passage earlier this year, we now have a program level of almost $273 million. The energy program, loan program, is something, when I look at the number of bankers that we have participating, we have so few. And it's an amazing program, and it's also real important to economic development. So we really want to take an opportunity to talk to you all about that, and myself, and I forgot to introduce Matt Moore, who is from our Columbia office at USDA. He's here, and we're here to talk, as long as you'll have us, about our programs, because we're very engaged in speaking to lenders, because to get that $270 million out, we can't do it without you all. And then we have a biorefinery assistance program, and it's a place where we have many we have a lot of community banks, but we have big regional banks that have participated, and those are for big biorefinery projects, right, where we're trying to get off of fossil fuel and we're turning waste into oil, or this is my little example of algae. So there's a project we loaned $56 million to a company called Sapphire Energy, which is in New Mexico, and they paid us back, which was good, except for it wasn't good because we would have liked them on our books for our subsidy rate would go down. But they've paid us back already, and they have a big project and employ a couple hundred people out in New Mexico, turning algae into oil that's now in offtake agreements with jet fuel people and other people. So we fund that kind of stuff. And then just so you know, the size of our BNI lenders, I imagine people in this room are bigger than a lot of our banks. We'd like you involved also if you service rural areas, but that's just a list of our top 10 BNI lenders for 2014. And then just again on the energy title, the type of things that we fund, again, having to be in small towns, are those projects like solar and windmill and doing things that create opportunities for job creation and opportunity for energy efficiencies. And then the really important part, and the part that really gets me up in the morning, is how important the mission is. And those of us that are involved in any kind of economic development, and I know the Federal Reserve does a lot of tremendous work in this field, is making sure when we're doing it that we're doing it in a holistic manner. So if I could have taken the urban dots off of this, which I couldn't because it was in a PDF file, when you look at the country and you think of it without rural, the country doesn't really work out. So it's very important for us that are leaders in communities and work in government and with our partners to recognize that these cities don't work out without the rural part of this country. So when we're talking about the decline of the rural population and rural businesses not having opportunities for capital, we're talking about the decline of the national economy. So we take it pretty seriously. And our secretary has been on a very much a mission trying to find ways to leverage federal funds to get more capital into rural America. And we're very, very happy with those results that we've been getting. But again, we need more lenders and we need more partners, and we're just one small piece of the agency, a piece of the puzzle, but we can be good leveraging partners. And then we have something called the White House Rural Council. It was the administration's recognition of the importance of rural America. And basically, it's a way to just bring together federal resources. You all know how in Washington, sometimes we don't talk to each other, and I'm sure you guys have seen some of that. But this idea of making sure that when you're in the rural part of this country, those almost 51 million people in rural have an opportunity to look at the federal resources sort of in a holistic manner. And one of the things that we did was we created a Made in Rural America initiative, because there's a lot of manufacturing going on in rural America. In fact, a lot of really neat manufacturing. And because of e-commerce and the ability, or our recognition, or everybody's recognition, that 95% of our customers live outside this country, to get those manufacturers to recognize that, and other businesses, that lots of their customers are offshore and that we need to get to them. And one of the things that we've heard is that when they go to banks, that they're not really given the opportunity or let's see, let me rephrase that, since now you told me this is on video and being filmed. We've heard from banks that it's hard to sort of evaluate what kind of asset that is, I guess, when you're doing these marketing plans. I mean, what is that doing when you're a small business and you're wanting to do export, and where do you go for monies, right? And so we have an export bank in this country, but it's very, it's not very big. It deals, quite frankly, with mostly city companies based in cities. And so for rural folks, they need their bankers to help them guide them through this. And so we think, and we've seen, and the numbers really substantiate that, those companies, those small businesses that are doing exports are much more stable. I had that experience when I started a company. I was sort of too dumb to know that you didn't export. I was coming at it from the other way because I looked at it as a consistent stream of capital, right? To get those first, 20% of your sales from exports, that you had that locked in. So we do a lot of messaging about it, and we would really appreciate if those banks that service rural America start messaging about rural. And then just for facts and figures, we have some paper we put out on the table, and Matt and I are both going to be here for the sessions. But the business and industry program facts are that the eligible borrowers, again, the most important requirement is that they live in, not the most important, but one thing that kicks you out is you have to live in a town of less than 50,000 people. Our sort of sweet spot for what we lend, our average loan is about $3 million. We can go, the states have authority. So the state of Missouri has a fantastic state director, a political appointee named Janie Dunning, who offices out of Columbia, and she has authority. She doesn't have to put it up to Washington. She has authority to go up to $10 million on loans. And then we actually can go up to $25 million in loans that have to go up to Washington. So we try to get the states, they have an amazing field presence, and they do most of the work. And the terms and the rates are negotiated between the lender and borrower. What's not just sort of, but very important that folks don't realize is USDA for small towns is the government. For many small town folks, the only government folks you come in contact is your postal person or a USDA employee. We have thousands and thousands of people in the field. So from a risk perspective, in my opinion, and I know I'm biased, when you're talking about doing a guarantee with a project that's come to you from a rural development loan specialist, it's already got some risk mitigation in it, because 9 times out of 10, our folks know that company or that family or a person involved in that deal. I know the bankers that I grew up with in a small town, they would always use the phrase, and I sort of use it in my everyday life of, if mama won't lend to you, nor will I, right? And so for small towns, our loan specialists, they go through the process with that small business. So because we have this amazing field presence, over 400 field offices for USDA, and just in the state of Missouri, we have over 100 folks that work on rural development projects and loans. When I say hand-holding, it's not hand-holding, but we've had people that are trained to look at deals. And so when the bank and the client and our employee work together, it seems to work out for us. And so I just feel that it's very much a plus for a deal, right? To have another set of eyes on it. And so we just encourage you to reach out to our folks. The Rural Energy for America program, which I want to take just 1 minute, is something most of you probably don't know about, because it's been one of those programs where Congress wasn't sure. And so they kept going in and out on funding. And so banks didn't really want to work on deals where they weren't sure about funding. So this is one of those examples where that's our mess up in Washington. Under the Farm Bill, we've been given the authority, mandatory money, to put out over $200 million. And so this is a program where, again, it's very good for the rural space, for folks to go in and do energy improvements. And you can be an ag producer or a small business. And those are used for, again, solar, wind, energy efficiencies. A perfect example, folks in Louisiana, a small business, in a recreation area, had refrigeration in the store in the small town from maybe 1967 or something, and so there are all kinds of stuff wrong with the refrigeration. And so for us to come in and do a small loan made it so these folks get to have lower energy bills, more, better for the environment, obviously, but and just a way to reduce energy costs. The Biorefinery Assistance Program, which is, I'm just giving you the example of the algae project. Those are big projects, and I'm assuming some of the bankers here are for big projects. So those loans are to folks who are trying to come up with ways to do energy that's not coming from fossil fuels. So we have folks taking municipal waste and turning it into energy. We have algae folks. We have all kinds of interesting technologies coming at us. And what happened in the Farm Bill is we were authorized to also look at renewable chemicals as a bio-based project. So these are loans. We probably only have three or four banks in this area, mostly because people don't know about it. So this is my telling you about it. And these are nice guarantees where we're just trying to move the dial on our non-reliance on fossil fuels. The BNI versus the REAP program, we have a sort of a difference, few differences, but not a lot, and we have a one-pager on that. But, you know, to this crowd, I would just like to say that when I've done lender roundtables in small towns, I hear two or three things. One is, we don't like working with USDA if you guys don't know that your money's coming, right? So that's on us. That's on our dysfunction in Washington and not having a budget pass and sequester and everything, no matter what your politics are. Small business needs certainty. Right? So I think we can all agree that job creation is a good thing and certainty is a pretty good thing. And so when I get to lender roundtables, which are always fun to hear when you come from Washington, you know, you got to give us certainty, and that's what the bankers tell me. And then they also say that sometimes their regulators don't understand our program. So, and again, that's on us. So this is our opportunity to make sure, if you have questions, to ask us. We have banking commissioners that have been just awesome trying to message about our program. We've had the Federal Reserve's been very active working in conjunction with us on things like community economic development. But at this time, because of our authorities under the Farm Bill, this is our time to really talk about it. And it's our time because we're on a mission that we've got to really enhance rural America, or it doesn't work out for any of us. And just so you all know, because of our field presence, it's much better for you to go to the state office in your whatever state. If you're a regional bank, obviously, or anybody can come and pound on us in Washington, and I'll leave cards here and talk to any of you. But for deal flow, going to those state offices and meeting the state director or meeting the loan specialist is a really good way to start to get to know our programs more. And I'm here to answer questions, and appreciate you having me here.
Great, Lillian, thank you very much. So let's go ahead and hear from Linda Rouchet at the SBA via our video opportunity here with the Board of Governors. Linda, welcome, and have a crowd just waiting to hear about the news from SBA. So the floor is yours.
Thank you, Ariel. I presume you can hear me okay?
I think we're going to turn up the volume just a little bit more for our group here in Kansas City. So probably the streaming audience can hear you, but we're going to adjust it here in the room here.
Okay. Hi, I'm Linda Rouchet. I'm with the Small Business Administration. Can you hear?
Yes, you're coming through.
Thanks. On behalf of our administrator, Maria Contreras-Sweet, who cannot be with us today, thank you all very much for coming and listening to our information about how we can help you help small business. I regret that I can't be with you today, and there may even be a few of you in the crowd who know that I really regret that because I'm a native of Kansas City, and until about a year ago, I worked in Kansas City for the Small Business Administration in several capacities. So go Royals, and I miss the state. I'm here to share with those of you who are familiar with SBA loans a few new items, and for the roughly 50% of you who are not currently familiar with or working with SBA, let me share with you a little about what we are and how we may participate with you in helping your small business customers. We are essentially a $100 billion portfolio of guaranteed loan commitments made to small businesses throughout the country. We book approximately $20 to $25 billion worth of guarantee credit every year. Just this past year, that touched over 50,000 small businesses with new loans. However, we cannot do that without your assistance because we don't deliver the loans directly. We deliver them through guarantees. Many of the guarantees are a portion of a bank loan made by a bank lender, up to 75 or 80% of the loan balance made by the lender, guaranteed by the SBA. We also participate in a 504 program where we are involved with a lending partner known as a Certified Development Company, or CDC. And that Certified Development Company assists us in providing project financing for large fixed asset projects. Our size limit for loans is $5 million per small business, and we have recently begun to streamline our product. So I'd like to share with you just a few of the new items that we can bring to you as lending partners. We recently streamlined our regulation to reduce the amount of required investment in a small business loan. For those of you who have worked with SBA before, you probably know this as the Personal Resources Test. SBA does not compete with you, our lenders. We provide guarantees to help you make loans and mitigate your risk and be able to deliver credit to a small business customer that you, a lender, would otherwise not be able to deliver. A piece of those rules formerly required that the small business owner be limited in how much they could retain on their personal financial statement, beyond which they were required to invest into the business. By eliminating our Personal Resources Test, we now allow you to make the loan with our guarantee and allow the small business owners to retain additional strong solvency on their personal balance sheets for potential unforeseen circumstances, as we all know business encounter. A major new innovation and streamline for us this year in our bread and butter 7A loan program is moving into the area of credit scoring. Many larger banks already have been using business credit scoring for some number of years. However, SBA has been testing it on the origination side for the last 2 years, and we've been portfolio scoring our loan portfolio for a decade. We are now bringing that credit score availability to you, our small business lending partners. For loans of $350,000 or less, we allow you to ping our system with basic identifier information, and if that personal and business identifier information generates a credit score above our threshold, we allow you to abbreviate the processing in which you are required to engage when you send the application to us. We have seen an uptick in our small loans since this was initiated in July, but we'd like to see a much more robust use of this credit scoring feature for you, our small business customers and partners. Additionally, we have streamlined our processes for processing in our centers in Sacramento and Herndon. Sacramento is where you send loans with SBA if you're approving the loan, and we've reduced our turnaround times to just 2 weeks in our Sacramento processing center. Any of you who are familiar with us also know that occasionally a loan does not pay as agreed, and you, as the lending partner, ask us, the SBA, to honor our guarantee. In other words, pay on that guarantee against the risk because the business was unable to succeed. We have streamlined our processes in our Herndon Guarantee Purchase Center, and we are now again delivering on our brand promise that when you request a guarantee purchase and you provide us a complete package of all documents and forms evidencing the loan was properly approved and closed, we are meeting our brand promise of 45-day turnaround. There's lots of fear of lenders who don't work with SBA frequently that we won't honor our guarantee when you request it if the business does not succeed. but SBA honors well over 95% of all guarantee request purchases based on the experience we have with our lenders and our small business customers. It is only in the rare exception when you may not have a valid guarantee, and that would be perhaps because of a mistake on the part of your action. We are working very diligently to make our rules and regulations clearer and easier to use so that becomes less and less of a risk. And the final innovation I bring to you today, for those who have worked with us before, is that we are providing fee relief as last year, continuing into this new fiscal year. Probably everyone in the room knows there are fees associated with SBA loans. Specifically, for the 7A loans, there is an upfront on guarantee fee, a one-time upfront fee, sort of like the initial insurance premium. And then there's an ongoing annual fee that is also paid. Slivers in both cases of percentages, basis points. We, last year, introduced fee relief of both the upfront fee and the ongoing guarantee fee for a loan less than $150,000. So every loan made last year that was $150,000 or less received a full fee relief from the agency. Neither the borrower paying the upfront fee nor the lender paying the ongoing fee were required to make those payments. And that circumstance will continue for the life of every loan made last year of that size. We have continued that fee relief into fiscal year 15, which we've just now started. So that fee relief for very small loans will continue for the next 12 months. But in addition to that, we are bringing to the table fee relief for loans owned by businesses of veterans. Veterans, their spouses, and their dependents may receive a fee relief on loans of up to $350,000 booked in our express delivery method, and veterans may receive fee relief on that upfront fee of up to 1/2 of the charged fee for our full $5 million loan size. So we are strongly and aggressively promoting loans to veterans, and we hope that you, our lenders, can participate in that with us. We work with roughly 4,500 lending partners. However, roughly half of those partners have not made a loan with us in the last 12 months. So I'm hoping that I'm speaking to some of those lenders today, and that some of the ideas I have provided you about our streamlining and our benefits have piqued your interest in possibly assisting one of your small business customers with one of our loan guarantee products. I will conclude my remarks by driving you to our field staff. We have over 65 very robust district offices. One is located in Kansas City. Acting District Director Daniel Webster may in fact be in the audience, I'm not sure. However, adjacent to the district is also our regional office in Kansas City, and I'm almost certain Pat Brown Dixon is there with you today. Both of them have amazing staff, but if you're not from Kansas City, we have at least one or more field offices in every single state. In addition, those field offices has a hugely robust network of service providers, retired business folks, business development centers, entrepreneurial centers, and if you touch base with our district office closest to your location, you can find a wealth of resources to assist you. And if you're not close to a district, we're always available at www.sba.gov. So I sincerely appreciate being with you today by video, although I'd much rather be in Kansas City directly. And I would be happy to answer any questions you have about any of our programs today relative to helping small business and improve our relationships. Thank you.
Great. Linda, thank you very much for those remarks. So again, as a reminder, we're going to have microphones available. This is the time to basically ask of our presenters, some of the questions, the high-level questions in regards to USDA and SBA as far as their
Ariel?
programs. Yes. Am I coming through? Can you hear me, Linda? All right, I'm having our staff kind of check the sound. Sounds like you're not hearing me on that end.
Now I hear you.
Oh, okay, wonderful.
Yeah, we're good.
Okay, great to hear. Thank you. All right, let me just ask again, kind of just, how many of you are covering, how many cover a rural area? That part of your assessment or your market is rural? Okay, maybe about a quarter. Oh, okay, maybe, all right, going up to kind of half, probably. All right, good. Let me ask, and Linda, you touched on it as far as the guarantee, because that has certainly come up as an issue at past events. You tackled it as far as saying that the guarantee is honored. At this point, it's basically a 5% where it's been an issue. Help us with what are some of the common things that you're seeing with that 5% as far as the guarantee? Because that's one of those things that kind of just travels like wildfire. When someone says, boy, the guarantee wasn't honored, and it just escalates. So help us understand what are some of the things that cause that to occur, and perhaps some solutions that you have in mind. And Lillian, I'll ask you the same question as far as the guarantee, but when you and I were chatting, you said that wasn't really an issue for USDA, and kind of would like to learn why it isn't. Are they restructured, or what happens there? But Linda, if you wouldn't mind kind of tackling it from that question first.
Thank you. That is a great question, and provides me the opportunity to clarify some misperceptions. We guarantee commercial loans. Those loans should be booked consistent with the way a lender would do a loan in a commercially reasonable and prudent manner. If you as a lender book the loan, do all of the appropriate documentation, touch base with your borrower once a year to at least ensure there aren't any mitigating factors that need to be done because of problems with the business. Then if and when the business fails, you are virtually assured of receiving an honoring of your guarantee. Mistakes are what generally cause a guarantee purchase not to be honored. Failure to file liens, failure to get a fully executed note. The same kind of mistake for which you are reviewed every time a federal regulator walks in your door. The fear factor seems to be the one-off event where you have bad experience, and we all remember those kinds of car accidents for a long time. But we at SBA are working very hard to help you use commercial lending practices you already use in your regular commercial book. So they're normal, they're typical, and you will have your guarantee honored when you present to us.
Okay, Linda, thank you. Lillian, you were saying that really hasn't come up as far as with the USDA RD.
It's never come up during my tenure, and I think it's just a couple of things. One is we don't do near the volume as SBA, and then second is because I think of our structure, because of our field structure, having sort of they're in those communities and they're doing the servicing themselves at the field level. So, I just think that's probably it. But I don't think I think again, some of it's mythical.
Okay. Okay. And so there might be more of a technical assistance component as well, as far as the field staff that are working with the bankers.
Well, they have with their lender visits. They're doing it out in the field, not from the national office, because they do all the servicing at the field level.
Okay. Okay. And a reminder: any questions? Raise your hand, and the microphones will be roving around for those. So. When I asked earlier, as far as the audience, folks that were using the product, we didn't get 100%. So in some cases, maybe the best we got was 50%. And Linda, you raised a good point on your comments that said, even though you have as many lenders that have utilized it, there's quite a few that haven't used it in the last 12 months. So what are some thoughts, recommendations? How can we get folks back on board if they have been a lender in the past? Why should they come back? Or if they haven't, again, your comments certainly covered that, but are there some things that you're seeing that would give them the advantage?
Well, we have the same issue as SBA on that we have, 1,700 lenders or something, but many of them are one-off deals. And then we have these consistent lenders. So we have the same issue and are trying to get people. I mean, we haven't done a good job, I think, communicating ourselves. I can say USDA, again, part of it is our, inability to talk about it when we didn't have budget authority, some certainty. Okay. But with the Farm Bill passage gives us some real opportunities to talk about it differently. Okay. And it's not just on the multitude of things that are in our sort of house or our shop of talking to lenders. We don't do it very well. Okay. USDA, because it's not what we do every single day. We're talking, we're doing community economic development. Sometimes there's lenders there, sometimes they're not. Mm-hmm. For me, I mean, it's very much the business side is so important to the economic development, and we should be much more engaged with lenders. And we had our foot on the gas, and then when we were doing the recovery stuff, and then we've taken our foot off the gas, and we've suffered from it.
Okay. Linda, any comments that you'd like to add?
SBA has engaged in a really strong rewrite project for our regulations and our SOPs. And in working through simplifying them, we hope to entice many lenders to come back into our space. Our field staff of district offices is out there all the time, touching, speaking, and engaging both lenders and small businesses. And our most recent innovation that we're just now beginning to test is a new web-based entry into our loan processing system. We are calling it SBA One, and when fully operational next year, it will be something like a TurboTax for loan processing. We hope and intend that by making it so easy on the web, you won't be intimidated by the paperwork of a government guaranteed loan, that we will entice many small lenders to come back in with the 3 to 5 loans a year that you might have opportunities for in your small communities. So please stay closely in touch with the district office closest to your location, and also watch for our news about SBA One that's coming.
Okay. One of the things that I wanted to share with the audience, and maybe not so much for the streaming audience, because you're probably outside, in many cases outside our district, but with the Kansas City district, our 7 states, we conduct banker roundtables in many cases throughout the district in each of our states, interagency with the OCC and FDIC, and we've often brought in USDA and SBA to talk about the products and the programs and so forth. And so I hope you'll lean or connect with my colleagues at the Federal Reserve throughout the system, and as we can look for opportunities to bring in the bankers, the lenders, to talk about the products and the programs and how we can leverage those.
And OCC did a very good job, but it was back in 2012 of writing a nice piece on our programs, and we need to reach out to them and update it, because we're not as far along on the web-based piece as SBA, but we've got enhancements to our loan applications that we are working through our proposed rule that's still open for comments until November 14th, but part of the proposed rule and some of the complaints that bankers have had with our program has been addressed in the proposed rule.
Okay. Now, Lillian, you'd mentioned exporting with rural energy for, made in rural America. Right. Can you kind of elaborate a little bit more? Because, and let me ask the audience, how many audience members have customers, businesses that are exporting? Yeah, a third maybe. Okay. All right. So can you kind of share with us kind of what that might look like as far as Made in Rural America, as far as a resource for
Well,
those businesses?
there's been a national export initiative since, certainly since 2010, I think, which is this idea of growing exports, just good for the economy, and it is good for the economy. And so as part of a way to just maximize the reach that we have, because we're USDA and we're in these small towns, it was a way to just, reach in, like we were sort of maxing out on everybody knows about export in big cities, and what's that other part of our economy that we can make sure that knows about it. So we were used as just being the coordinator. So all of our folks are also trained to work with their Department of Commerce or their small, and the SBA is very active, and so we've just, these USIAC centers, which are SBA and Department of Commerce, and these centers that do export sort of education, our folks are trained on that also.
Now, is that something that the banker should be aware of, or the small business?
Well, we need the bankers to let the small businesses know.
Okay.
Right?
All right.
So, and that if we could have more bankers talking about exports, just in general, whether it's in when one's talking to their banker about their business plan, many people don't think of it, but certainly the rest of the world thinks of it, and we're way behind, and that's why it's so important to the economy.
No, it's actually, we did a similar session in Colorado a couple of years ago in Denver, and when we were asking about the exports, a lot of the bankers in that room weren't familiar with the export products that USDA and SBA had available. So again, an eye-opener, an education, an opportunity to share new resources. Linda, any comments that you would add as far as the export side for small business?
Yes, SBA does have several products that can be used to help your small businesses finance their export activities. Trade mission participation, opening new markets, revolving credit lines for exporting production. I think probably every small business that does something other than local service has the possibility of exporting. The USIACs are also a very good resource. I know USIAC in St. Louis, and any district office at SBA can connect you with the local USIAC.
Okay, wonderful. Let me hear from the audience. So again, we've got the microphones roaming, and also if there's anything from the streaming audience, Mary, make sure that that's coming through. So I'm going to ask you, as far as those of you that haven't used it in the last year, but you've used it in the past, either the USDA or the SBA, what's the concern, or what's the obstacle, or has just the opportunity just not been there, not needed? So comments from the audience. Right over here, and the microphone's on its way.
Yes, I had a question for Linda regarding SBA 1. Will the loan guarantee amounts increase with the rollout of that product? In other words, can we input online a larger than $350,000 guarantee request?
The question is whether our SBA 1 product will be usable for our entire size of loan portfolio. And the answer is yes, eventually. We are rolling it out in phases. The present estimate is to start with the smaller loan product, test it, work out a few bugs. But SBA 1 is intended to be a birth to death system. Origination, servicing, hopefully not liquidation, and even a piece that will help us oversee our lending partners in a minimalist and very inexpensive way.
Did that Get to your question? Yes. Feel good about it? All right, going back, as far as hesitation, not utilizing the products, I have a hand here. Is there another hand? We've got a couple of microphones over here. Anybody on this side of the room? Question? Comment? Yes, sir.
Yeah, concerning the some of the reasons why we may not be participating with the programs at this point, some of the smaller community banks with other regulations that have just passed recently, Dodd-Frank, for instance, we have limited resources to be able to attack the new things that we have to attack from that standpoint. And once we have those basically in hand and feel comfortable that we are making sure that we're in compliance with that, then we can move over, look at our marketing and promotion for maybe the USDA program, more SBA. But because of the limited resources, we have to just do one thing at a time.
Okay. So are you basically staying with conventional so that it's in-house?
Correct.
And not utilizing, okay, all right. Is there some similar thoughts there? There's a recent, I guess it came out last week as far as the survey of senior lenders, and my understanding from the survey was that some of the underwriting has kind of loosened a little bit more, but yet I was hearing on the demand side that it hadn't picked up as much. Is that any comments on is it a demand issue? So are you not hearing from segments of your community for small business lending? Is the survey true that the demand is kind of weak? I'm hearing some nods and microphone over here, and there's didn't know if you wanted microphone over here, a young lady with the blue. Go ahead. Oh, were you talking on the? And then microphone over here in the blue as well. So back up. Yes.
What we're seeing as far as demand goes, there is demand for the SBA product, but the competition is so stiff that a lot of financial institutions are forgoing the SBA guarantee, undercutting because there is a guarantee fee out there if the loan's over $150,000. So what we might say, this is truly SBA qualified and should be done as an SBA loan. Some of the competition is not going that direction and saving the borough the guarantee fee.
So they're doing conventional?
They're doing conventional financing. Whether it's wise to do it that way, don't know, but we're seeing that it's more of a competitive environment.
Okay. So on the competition side, comment over here, please.
Actually, good morning. This has been very informative. My name is Sandra Olivas, and I'm with Brotherhood Bank, and I am working primarily with the Hispanic small business market. And as you know, in Kansas and Missouri, there's just been a phenomenal growth in that area with Hispanic small businesses, many of them doing it without a single loan from a bank. Now they're ready to expand. They are starting to reach out to banks for loans. And I wanted to know how many of your SBA loan guarantees have been issued to Hispanic businesses and any recommendations you would have to work with them and show them the benefits of having an SBA guaranteed loan.
I don't have the numbers at the top of my head about the numbers on Hispanic, but I can certainly get that for you. If you would send through Ariel or electronically through the methods of the Federal Reserve. Any SBA person can also be reached by their first name dot last name at SBA. So please share with us that question on paper or email. We will respond. I would encourage your Hispanic organizations to touch base with resources like not only the district office, but the Kaufman Center there in Kansas City, very robust assistance, and the seminars like this where you can obtain help develop those linkages to help the small businesses become better informed about putting together business packages that will have more success at the banks.
All right. And I understand that the administrator certainly has a significant push as far as for women-owned and minority-owned businesses, as far as to continue to promote that outreach through the SBA. Is that correct, Linda?
That is correct. Our present administrator, Maria Contreras-Sweet, herself a small bank owner formerly in the Southern California market, and she has a very strong affinity for our underserved market populations, women-owned business, minority-owned business, veteran-owned business. So we have some very strong push of marketing and education that we are reaching out for those underserved markets. I did not even mention that we have a Community Advantage program which we deliver through CDFI networks of Community Advantage lenders. You can also get more information. I was thinking there might be one or two CDFIs in the room. I see a hand or two there. Thank you so much. Please, if you're a lender and you feel you have an underserved client that you're really struggling to work with, get them connected with the CDFI and with the local Certified Development Company network to help provide additional guidance and counseling. And sometimes you just need a little bit of help hand-holding in putting that loan application or business management business plan together. And those resource networks can help get that loan package to where the business customer can have a success in then working through your institution.
All right, great. Let me go back to, and I see a microphone needed back there, and its microphone's coming to you. But let me go back to the comment that was made earlier. It sounded like it was, Robin, that it was a rate issue or a fee. Okay, it was a fee-related issue. Okay, so that was something where, and Linda, you talked about the fees as far as some of those reduction in fees for the lower dollar amount, $150,000 or less. Lillian, as far as fees for USDA, how does that look? How does that, as far as the fees for the small businesses? And again, if you're hearing from bankers that are saying it's cheaper or less dollars out, I guess, for the business owner, that they're out to just go conventional versus using an enhancement, what have you.
Yep, and we've heard that before, and I think that's spot on. And we don't have anything in process right now to lower our fees. We talk about it a lot. Would like to. It's just it's not on something we're able to do at this point, just with our subsidy rates and different things.
I understand. We have a question in the back, please.
Yes, thank you. I just wanted to follow up on the previous question and ask both the USDA and SBA if your materials have been translated into Spanish and other languages, and if you have bilingual staff folks in these district and regional offices that can assist.
Really good point. Our materials are translated, and we into certainly Spanish, and then we have some bilingual personnel, but we don't. And it's something we talk about a lot. Also, we work with on USDA because of our agricultural piece of it. We use a lot of just on the outreach piece, which I think the other question was. We do a lot of outreach for Hispanic through Hispanic serving institutions, colleges. And so that's where our outreach piece, but in the actual, our percentages are actually pretty good for serving Hispanic population, but we have huge field presences in Texas and California, and both of those states have Spanish-speaking folks, but you can't call in a number and get transferred, I don't think, in Spanish, but I think we've looked at that as a potential service.
I would support that SBA's materials are also translated and available in Spanish. We have some bilingual staff, and I noticed recently our recruitments are beginning to look for that more frequently.
Let me ask, the other thing that I continue to hear is in regards to documentation. literally, the bankers will say, okay, if I have to do this, SBA or USDA, it's going to be a thick file of a lot of documentation that's required and so forth. How much, well, let me ask the audience, is that your impression as far as that it is a lot of documentation? I'm seeing some no's. Okay. Any yeses? Okay, so maybe that's one that isn't happening anymore. Any thoughts or any comments in regards to the documentation issues? Is that a stumbling block? Is that an obstacle that you've heard about? And
We've all, I think, heard about it, and historically been a challenge, but and we're not as far. We're watching SBA and seeing how SBA 1 goes, and hopefully we'll get a loan application web-based like that. We're just in a queue as far as resources, but we have a pre-app also that we do. We have just a pre-app that our folks, and then we have sort of a simplified form, but we've gotten better at it. But I think in the old days, I think that was one of the complaints about the B&I program.
Okay. Linda?
Actually, this gives me a great opportunity for a commercial. About 2 years ago, we streamlined our application processes. We have one application for the borrower owner and one document for the lender, and we consolidated many forms onto those two. They're not as long as that sounds, and we've seen an uptick in our volume, which we perceive in part is because we are looking for ways to align our process with what the bank already does. And given that we produced over 50,000 relationships just this past year of booking those loans, we believe we are seeing a success. That doesn't mean we're going to stop, and certainly SBA 1 may be able to take us to the point where you can input virtually everything by web, press a few buttons, and get the forms printed out for you, already pre-populated in an ideal world. That's where we're headed, and that's where SBA will continue to pursue improvements.
Hey, Linda, remind me, what's the date for SBA 1 as far as the launch?
We have testing in the early spring. We haven't set a specific date certain for the official full launch.
Okay.
But
Lillian,
we've been working on it for well over a year.
okay, great. So be on the lookout, things that are coming online.
Yes.
Lillian, question. Now I have a question up here in front, so if someone with a microphone, please. I have two questions here. And question, Lillian, for you, one of the things that we've heard in some states, and then right behind you as well, in some states is that the lenders will basically get the application, get everything going, and then that state no longer has funds available. It's been oversubscribed for that state, and then they have to go to the national pool.
Yep.
How, anything that might be changing on that? Because we certainly know economies are different from state to state, and some may be oversubscribed because of the growth that's occurring. How does that, with the certainty and the delay that can cause, any changes there, or any thoughts that you can help the audience with here?
Well, we have a national reserve, and so we're normally able to work it out. But when we had sort of the budget issues that are not in our control, there was some challenges, and nobody wants to let a deal just sit there for 6 months, and no banker wants to be involved, and certainly the small businesses lost interest. So we definitely had some black eyes on that. But with some budget certainty, which we think we're all going to get, I would assume, that the states we know that don't underperform, but they just don't have the relationships, so to speak. We believe that we'll be able to work it out with the national reserves. There's some, California always uses all their money and other states' money. Wisconsin always uses their money and other people's money. Iowa always uses their money. There's some states where there's this huge presence. Sure. And one of the things we're trying to do is just get all of our states to increase their lender relationships. But some states, it appears there's just these areas where there's just real credit deserts, and we certainly see it in our states.
Okay. Thank you. So not so much of an issue anymore. I mean, so again, I'm probably going back to something that was historical. And again, so dispelling that issue. Have a question right here in front and then second over here.
Actually, it's more of a comment. I submitted 2 SBA loans yesterday through E-Tran. It's all electronic. One was a $600,000 deal, so you just enter anything electronically, upload your documents. There's no paper. You don't have to mail in, a 6-inch stack of paper anymore. It's all electronic, so it's a lot easier now. And also a comment towards the fees. I'm from the state of Oklahoma.
Yeah.
And the Oklahoma government has passed a law a number of years ago where they're able to apply those guarantee fees, excuse me, as a dollar-for-dollar state tax credit.
Oh.
So that offsets some of that issue for our customers in the state. It's not in every state, but it's something you might talk to your Congress people about.
Well, there's other uses as far as for using that enhancement, because that also means less money out of the business owner's pocket in many cases. So it can also be a cash management tool for the business. So good. So I'd like to hear that. So Linda, there was a positive in regards to the easy method, and sounds like it was very quick, very efficient, and closed or got $600,000 deals into the pipeline. Great. Question over here.
Thank you for the commercial.
Oh, go ahead, Linda.
Now,
Yes,
I
good-
would mention that E-Tran is our first generation of electronic processing. SBA 1 will extend it farther to the entire management of the loan. Thank you for the commercial.
So it sounds like E-Tran is working well, and so again, that's the reason for SBA 1. So again, it's proven that it's working. Terrific. Question over here in front.
Yes, good morning. I have a question more for my own edification as it pertains to USDA. I'm a little embarrassed to say I've been a commercial lender for 12 years and never done a USDA deal, and predominantly work within the metropolitan areas. So my question is really in regards to eligibility requirement. The 50,000 population. Is that something that we can look at? I mean, is that a business entity as far as the eligibility, or the guarantors? How does that tie to being eligible for a program?
The eligibility is for the business, right? So it's got to be some business in a population of less than 50,000.
So where the actual business is harbored.
Right. So certainly we have banks that service those areas, but and it may be just another banking relationship, but it's designed to just, the eligibility is just designed to sort of keep capital in these rural towns. Sure.
So we have, as far as rural, certainly for USDA, 50,000 or fewer. Linda, as far as with SBA restrictions across the country, geographic areas, what have you?
There are no restrictions geographically, and we don't have pockets of funding by state. Our entire funding source is available everywhere. This year we had we were concerned we would run out of our statutory limit of $17.5 billion, and the last minute continuing resolution bumped that to $18.5. We would have been out of money for 2 or 3 days at the end of the fiscal year without that. But we are pleased to announce that we are again at zero subsidy for our 7A program. So while we do have some fees, the basic program itself costs the taxpayer in subsidy zero. And we work and strive to keep our metrics at that location because it's a good value for the taxpayer.
Very good. Question over here, please. Yes. And just a reminder to the streaming audience to submit your questions via the comment button. So again, if you're streaming, don't forget to submit your questions through the comment button. Yeah, go ahead.
USDA question. Okay, so if the business is located in a community of 50,000 people or less, does the project also have to be in the same community, or can it be in a different community?
It can be in a different community, right?
Okay, and would that project also have to be within a community of 50,000 or less?
Yeah.
Even though the business is located in one?
Right, it's where the project's located.
Okay,
so,
it is
yeah.
project-driven then?
Right.
Okay.
The only exception to that is we are very interested in local foods and farmers markets and opportunities for local foods. And so if you have a project where you're funding a ag producer or small business that's selling into urban, like, JB's, farm, but the projects, the commerce is going into an urban area because of a farmer's market. I know you guys have farmers markets here. We fund that also.
We have a question right here in front. Thank you.
Yes, thank you. I happen to be commissioner of the state banking department in Kansas, and most all of our 228 banks are in rural America. Is there a limitation or a restriction whether our banks that are in communities of 50,000 or less, do they have to go to SBA for a project, or can they go to USDA for a project, or do they have to go one or the other? Is there a restriction? And Linda, good to see you.
Hi, Daryl.
Hello.
No, I mean, we work joint projects, right? So it's not an either or. I mean, we've funded projects just depending on the relationships, but we've funded projects with SBA being a piece of it. Thank you.
Oh, that's interesting. Okay. And I wasn't aware of that. So there are times that there's been a USDA, SBA participation, and then with the financial institution.
Yes.
Is there an example that either one of you could share that, because I wasn't aware of that, those occurring. So Linda, do you have one in mind that you could share with the audience, or how it was structured?
Actually, I don't at this moment.
I have one.
Okay.
I just know one in Oregon that we did was just where SBA did the working capital, and then we did the equipment. We did the factory equipment.
Okay.
So
Okay.
we did they did, I don't know, 500,000, and we did $2.5 million on the equipment.
Okay, and then the bank, all right. Well, wonderful. Okay. Anybody that's done a deal where you've had USDA, SBA in the audience? Okay, good. At least I wasn't the only one. All right. So, Lillian, I wanted to hear more about Rural Energy for America program, because you said it was a grant program and also a loan program.
Right.
And so, loan program, is it a direct loan from USDA, or is it a loan as far as participation with the financial institution?
Yes, yes.
Oh, wonderful. If you could share a few more things about that, because, and the reason I'm interested in it is because I just see it as another tool to assist with mitigating risk.
Well, absolutely. We have $80 million in grants that go to small business, again, rural areas, or ag producers, and then we have right at $200 million for loan guarantees. Those are guarantees. It's very similar to our BNI program. We've just never had this kind of money before, so we know that we want to have it dispersed, technologically diverse as well as geographically diverse. The Midwest sort of has the lock on this kind of stuff, just so you know, because they have rich history in agriculture, know how to put deals together, and so not that we love the Midwest, obviously, but we want to make sure that funds get outside of Midwest. So it's something where if a bank figured out how to work with us, they could make a lot of money, in my opinion, because once you understand the deal flow, then this is mandatory money. It's not going away. It's like it's here. So for the next certainly 10 years, there's going to be hundreds of millions of dollars going out for energy projects in rural America, and whichever banks, and we don't have very many banks in this program right now because they didn't like us very much because the money kept getting, they could never compete it, right? So they'd do deals and then they'd have to, it was such a small amount of money that we would have to wait 6 months to compete the deals. So they'd be sitting on deals. Now they'll have monthly allocation, monthly competitions.
Okay.
And so that makes it a regular program. So we're just standing this up right now, like the notice will go out at the end of November.
Okay, so you guys are the first to hear about it, which is great.
Right.
Have another question here, but let me follow up with that. What's the guarantee look like? Are we looking at like an 80% guarantee, or does it depend on the
Depends
dollar
on the
amount?
size, but it's 60, 70, 80.
60, 70, 80%. So again, wonderful on the risk side.
And I have a fact sheet on it that's part of the notes in the slide presentation for
Okay,
folks to know.
so again, going back to the slide deck that all of you have access to, will be, you have that on that slide. So question in the back.
Yeah, can you talk a little bit on both programs about refinance options or opportunities, if any?
You're referring to just putting, without doing a new deal, just putting things together?
Yeah, if a borrower can, refinance. I know there were some limited options at some point for SBA, but just trying to figure out on both programs. A lot of times, some borrowers, if they had started a project today, they may qualify for one of those programs, but we may have started the loan as a conventional, but then trying to figure out if there's a way that would open up opportunities to help a borrower out.
Yes, we do that. Our issue is, we have like a priority point system from our, what's creating jobs. I mean, I have to go in and explain to the secretary, what our portfolio looks like, and, we just try to do things that create more wealth. So if that project looks like by doing financing, you're creating jobs, that's one of our parameters. But we do those. We do a significant percentage of those, actually. On the REAP program, I don't have enough churn to tell you because that we've ever done it before on the REAP program. Just on the BNI program, it's certainly it's an eligible purpose.
Linda, comments from you in regards to refinancing?
Yes, in our 7A program, refinancing is an eligible use of our proceeds. There are specifics about why and how it works for the business that must be answered as questions. There is a little confusion right now because in the 504 program, that's the Certified Development Company program, there is a wholesale refinancing feature at the present time. It has been robustly debated since a very short phase when it was available during the recovery of the 2009, 2010, 2011 fiscal years. So presently in 7A, refinancing is eligible, but presently in the 504 program, it is not.
Interesting, okay. Other questions? Again, we've got the microphone roaming. I wanted to add, Linda, so in regards to the product that's for loans that are under $150,000, so did I get it right? So no fee at this point in time, and for 2015 calendar year or fiscal year 2015,
fiscal.
No fee. How's that going? What's the anything that you can share in regards to that dollar amount? And I'm not sure if that's the space for this audience as far as loans that are 150,000 or below. I don't know what the sweet spot is for some of you guys. But Linda, any comments that you could add to that?
Well, I can share with you, I was looking at some numbers yesterday. Over 30,000 of our loans at SBA this past year were small loans in that size range out of the 50,000 plus total. And I was just talking to some of our metrics, the folks who keep track of those metrics. We've seen a significant upturn in that small product since we offered the fee relief. This past fiscal year, 2014, was the first year we offered that fee relief. and it had measurable impact.
Great. Now, is some of that running through CDFIs, or is that through the financial institution?
That's through the financial institutions. That's our regular 7A product through financial institutions.
Okay, wonderful. All right, terrific. Well, you know what, we're quickly approaching the end of the panel, but I wanted to give both of you the opportunity for closing remarks as far as anything that, it's kind of like the opportunity for the last pitch, let's say, to bring folks on to, to consider utilizing a USDA product or to consider utilizing an SBA product. And hopefully we've provided them with enough information to whet the appetite, as I like to say, to come back. That if they haven't done a deal in the last 12 months, maybe they'll reconsider. And I know that for both of you, for USDA and for SBA, we have quite a few materials on the resource table. So just FYI, just right outside the doors, we have a resource table, and so have quite a few materials there from both of the agencies that's available to you. But Lillian, last thoughts with the audience.
First, thank you for having me, and I've really enjoyed this and learned some also and realize how important relationships are. And we just haven't, we have our state offices and our loan specialists that do all the heavy work dealing with individual bankers, and we just need more of them. So really, just ask you to give us a chance to work with you. And then secondly, that we do have a proposed rule, which means it's open for comments. If there's something when you go and look at, hey, maybe we'll give them a shot, and you look at something and it looks like a deal killer from your standpoint, please comment, because this is our opportunity. This rule hasn't been revised for 20 years, and so we're trying to get it more workable. So if there's something that you see that we're doing that's just the reason you don't want to work with USDA is because of this, this is our opportunity to change it. So, and just really encourage you to work with your field offices or your state offices. And if there's anything I can do, I'd be happy to.
Terrific. And again, that information as far as how to connect with those offices is included in the material that's in the back, but also, as I mentioned earlier, it's on the link that we have with Lillian's PowerPoint in the related materials. So, Linda, last comments from you, please.
Thanks very much. And yes, we sincerely appreciate the opportunity to speak with you today. SBA's mission is to champion small business throughout the country. So think of us when you need loan help for your customers, but also think of us when you need counseling help or guidance for that small business owner who just needs a little bit of help with some management principle. Contact the district office closest to your location and make use of those robust materials that we have to help you and help us help small business to create more jobs. Thanks.
Wonderful. Thank you so much. So again, and I think we, as you've heard from both Lillian and Linda, there's some great products and programs already active. SBA 1, certainly the easy opportunity there. The benefits for loans that are under $150,000. Look forward to checking out Made in Rural America and what's happening there, and also REAP, Rural Energy for America program. I think that's also some exciting opportunities for all of you. We're going to be taking a quick, before I get to those comments, will you join me in thanking our presenters, please? Lillian Salerno, Linda Rushi. Thank you both for joining us today. We're going to be taking a quick break, and my understanding is that Lillian, you're going to be here for a good part of the day, at least for the session, and Matt Moore with USDA is here as well. And we have folks from SBA here as well that will be able to do that one-on-one as far as any questions, and also have materials. So we're going to be taking a quick break, and we're going to be starting again at 10:45. So for our streaming audience, want to make sure 10:45 Central Time, and come back to hear about SSBCI, State Small Business Credit Initiative. I know when I asked folks about it, folks were like, I don't know what it is. So this is your opportunity to learn about it. I even, some questionable looks, let's say, in regards to CDFIs, community development financial institutions, unsung heroes in this space to assist small businesses, and the role that they can play so that we can get capital to these small businesses. And lastly, of course, we don't want to miss the regulatory panel, which is your opportunity to ask questions from the regulators, from the OCC, the FDIC, and the Federal Reserve. Don't forget, you have note cards in your pocket, in your folders, so we'll be taking those right at about lunchtime. So think about those questions that you have for that panel. And we'll also have the microphones roaming and so forth. So with that, we've got some snack items and so forth. Those of you that are streaming, stay connected. We'll be back at 10:45 Central Time. Thanks so much.
Thank you.
on. Okay, good morning, everyone, and welcome to those joining us remotely as well. My name is Teresa Perez, and I'm the Community Affairs Officer for the Federal Deposit Insurance Corporation here based out of Kansas City. I am pleased to moderate this morning for two great panelists, David Richter and Imogene Harris. As the Outreach Manager for the U.S. Department of the Treasury's State Small Business Credit Initiative, referred to as the SSBCI, as he prefers to be called, Dave is responsible for providing technical assistance, outreach and strategic planning to, and manages the relationships with state officials and interagency partners for 1/3 of the country. As Manager of Economics and Operations for Network Kansas, Imogene oversees the funding programs supported by SSBCI funds. Okay, Network Kansas is a 501c3 that provides small businesses and entrepreneurs with the resources they need to succeed. Okay, so if you will, picture this headline, okay? All in caps. Now, it could be in Yahoo, newspaper, magazine. Okay, here's the headline. Nearly 100,000 jobs supported by U.S. Treasury State Small Business Credit Initiative! Exclamation point. Okay? David and Imogene will share with us what it took and what it takes to make this happen. There haven't been many new resources available for small businesses lately, so in our opinion, banks and others should consider this program. We look forward to your questions and having a great conversation with you. I think when Ariel asked earlier how many people had heard of SSBCI, I think we were the only 3 that raised our hands. So we are looking forward to a lot of questions. Dave will begin with an overview of the SSBCI program, and so please help me welcome Dave Richter.
Thank you. First of all, folks, I just want to get a show of hands. How many of you have heard of SSBCI? Okay, so that's a little bit better than when we asked earlier, because I only thought I saw 3 hands, and that was the three of us. So it seems that there is folks here that do know about the State Small Business Credit Initiative. So SSBCI was created out of a response out of the downturn in the economy. We were created as part of the Small Business Jobs Act of 2010, and the purpose of our program was to create jobs to small businesses and small manufacturers throughout the entire country. Okay, so this is a new program, and this was a stimulus program. SSBCI awards $1.5 billion to state agencies for credit support programs. And I'll talk a little bit more about that later on, and we'll dig into what those type of programs are. In 2011, Treasury awarded $1.5 billion to 47 states, District of Columbia, and five territories and 4 municipalities. Funds are transferred in 3 tranches as funds are used. This map here shows the allocation amounts for all of the participating states, territories, and munis. As you can see, California, Florida, Michigan, and Illinois received funds that included over $60 million, with California being awarded about $160+ million. Eligible programs, as I talked about earlier, include our Capital Access Program, loan participation programs. There's 2 types here. That's the purchase participations and also a companion loan. There's a collateral support program, and we also have a loan guarantee program. Something that's kind of, I think, a interesting asset to our program, to our overall program, as you can see that we also have venture capital programs. About 1/3 of all of the programs throughout the entire nation do have a venture capital program. Some of our requirements under SSBCI include, at a transaction level, that there has to be 20% capital at risk in each transaction. At a program level, there has to be at least a 1-to-1 private match. And at a state level, there has to be the aspirational goal of reaching that 10-to-1 leverage at the end of the program. And let me talk about that. This program is intended to be a one-time program, a stimulus program. So the program started in 2017, or pardon me, in 2010, and it has a sunset of 2017. So how funds are transferred to the actual small businesses, it starts with Treasury. Treasury therefore transfers money to the state agency, and some states have designed a program where they have partnered with a contractor. So in that case, the state agency transfers monies to that contractor, and then from there that's transferred down to the small community bank, and then funds are transferred over to the actual small business. So you can see here that from 2011 up until 2013, and this is at the end of 2013, SSBCI has supported over 8,500 loans. And you can also see that we have invested over $4.1 billion into our economy throughout the entire nation. Here you can see that SSBCI loans and investments have leveraged private capital in states such as Kansas, Missouri, Illinois, and California, over $100 million in private financing. That's excellent news. SSBCI also is extremely proud to say that we understand that we have to serve the LMI or the underserved communities. Our program overall, nationwide, has focused those loans, as you can see, 42% of the loans throughout the program nationwide are concentrated in LMI. And as you can see, it's then broken out by specific program. This next slide shows the amount of dollars that have been allocated and deployed throughout the entire nation, with Idaho, Montana, West Virginia, and Kansas and Missouri are pretty much up there. I believe Kansas has deployed about 77 or 78% of all of their funds. And you can also see that as of June 30 of 2014, that California, as I had stated earlier, was awarded over about $160 million. Observations and lessons that we have learned is that there are a variety of programs. So the most fascinating thing about this program is that the states own this program. This is your program. The states have the opportunity to design a program that fits within your local jurisdictions, and we believe that that is powerful because you understand your economy better than we do in Washington. There's a range of agencies. Some of our programs are in the Department of Commerce. They are also housed in the finance authorities, and there's also programs that are in some of the nonprofits also. My job as an outreach manager is to bridge that gap between the state and between the actual, between the state and Treasury. So having 1/3 of the country gives me the opportunity to travel and to understand what those challenges are, and so that we can work as a team to actually try to understand how we can get money to those small businesses. And it's also important to recognize, because there are so many programs and because each program is designed specifically to your own local jurisdiction, that compliance is key. Because every program is unique, we have to have a good understanding what those questions are. So SSBCI was a response to what was happening in the economy. And we are thrilled to say that we can now say that we have supported over 100,000 jobs to the entire nation.
Dave, thank you, Dave. Do you want to say anything about, I think everybody's still sitting out there with that headline that about the 100,000 jobs. Do you want to say anything about that and how that's connected?
Certainly. So originally SSBCI was created for that catalyst to create jobs. And originally in 2010, 2011, as the programs were still trying to understand SSBCI, trying to market this new program, because this is a credit enhancement program. There's a lot of credit support tools. You have SBA, you have USDA, but how does SSBCI fit in your toolbox, right? So Treasury has done many things, such as having national conferences, so that we can understand what those challenges are, and so that we can work as a team with our state managers so that we can amplify this story. Keep in mind, folks, this is a one-time program. So we have 7 years. Our window of opportunity is a little bit past the halfway mark now. So it's been Treasury's responsibility over the past 4 years to tell this story. And telling that story begins talking to the small businesses that are located in states such as Kansas, Missouri, Nebraska, Iowa, etc. So the only way that we can tell those stories is if all of you are informed of SSBCI. So those are some of the ways that we've been able to tell our
Okay, and to my understanding, these the funds are not loans to the states.
Correct.
Correct.
Correct. So these funds are actually, this is money that was given to each state. The money stays in the state. The state does not have to repay this money back to the federal government.
Right.
So this is the money that stays here in your respective states. So you own this program.
Mm-hmm. And then when you refer to the sunset of 2017, that means?
That basically means at the end of this program, at March 31st, 2017, the allocation agreement or the contract that each state signed with U.S. Treasury will basically come to a head, and the federal attributes of this program go away.
And so all of the funding, they should have been allocated,
Yes.
right? And if they don't, because they draw it down in three
Yes,
tiers?
yeah, so each state was awarded, such as with Kansas. Kansas was awarded $13.1 million. Kansas received their first tranche, we'll say in 2011. States cannot request their subsequent tranche until they draw down 80% of that prior tranche. So think of it in tiers, if you will. Once states have graduated to that second tranche, then we start looking at, okay, so the state understands how to deploy funds. So, you know, there's an interesting dynamic right now. I would say about close to a third of the country right now where states are either applied or have deployed or on their third tranche. So the money is getting out there, word is getting out there, but again, there's still a need for folks to be educated on SSBCI.
Right, okay. All right, and I think we have, Imogene, you are here to describe Kansas SSBCI program.
Right,
Okay.
so we worked with our Department of Commerce to apply for the funds, and we were awarded, as you said, the $13.2 million in 2011. And we used those funds to set up a loan participation program and a venture capital program, using 70% of the funds for the loan program, and then 30% we allocated for the venture. And so with the loan, it's a direct loan program, and and then the VC is also a direct investment program. Both of them, in order to go ahead and have the goal of reaching that 10-to-1 leverage, we went ahead and just worked in the that match with each project. So we will only match up to 9% of the private investment. And it seems kind of like a difficult goal, but we've had a lot of success with it, and it's been working well. And I think the reason that's been working is because with Network Kansas, we use what we call our partner network to actually find the deals. So there's a lot of bankers here, and banks are involved, but we personally don't really work with you. Our partners do. So they've been able to go out and, they're the ones in the community finding these businesses that can use our program. Our primary partners for this particular program are the certified development companies, the CDCs. I think we have like 6. Most of them in Kansas participate in it. And so they're the ones bringing us the applications and the businesses and actually servicing the loans. So if anyone's interested, you want to learn more, you can certainly contact me, but also, talk to your local CDC. They should be able to tell you about it because they're the ones doing the deals. So, yeah.
Okay, and in that slide that you showed us, where does Network Kansas fit in that? I think you said the Treasury,
Right. Yeah. So it's Treasury. The state agency for us is the Department of Commerce, and then we work with them to actually manage the project or the program. So we're the contractor. Now we're a nonprofit, but Network Kansas was established in statute, so we're a quasi-government entity too. So we're not like a private contractor. And then if I was drawing this for Kansas, I would add a little sidebar there on number 3 for our partners over there that are then working with the lenders and the businesses too. And those partners have also helped us get into the rural areas of Kansas and into the low to moderate income areas. Because as I said, they're the ones out there, in the communities, working with them. They're kind of like our field staff that don't work for us. Yeah. They're not getting paid by Network Kansas, but they're our field staff out there, the boots on the ground. And it's been fantastic having them out there so we could get these funds deployed. We are on our 3rd tranche, which is great. We've been able to move the funds. I think we've leveraged, I wrote it down. So for the loans, we have funded or have obligated $9.1 million in loans, and that has leveraged $160.1 million in private capital, which is pretty great. I mean, especially if you're thinking of the size of Kansas and the size of our program, the money we were given. I think we've done a lot with it.
Oh, that's great.
Imogene, can you actually talk about that for a second? Because it's interesting, folks, when you talk about the nation and having 57 programs, and I know you're saying there's only 50 states. How do you have 57 programs? Well, there's 50 states, plus there's munis, plus we have territories. So American Samoa, Guam, Northern Mariana Islands, and Virgin Islands all have SSBCI programs also. So that's how we get to 57 programs. But what's fascinating, as I've seen throughout my portfolio specifically, is how Kansas is small, but you're nimble. You are agile. And you've been able to reach all of your partners through that network.
Right.
Can you talk a little bit more about that network? And I know you've already talked about it, but this or that Missouri or some of the smaller states have, as far as actually to source deals and understanding where your credit support or understanding how you have this toolbox, right?
Right.
But understanding how SSBCI fits in your toolbox.
Right. So we were fortunate. Network Kansas came about in 2004, and it was designed to kind of pull together the different resources for small businesses across Kansas. Initially with much more of an emphasis on rural, and we've since kind of evolved from there. It's still very much rural, but we're growing, we're expanding. So we've already building up this network, working with public and, organizations and nonprofits. So we already had this network of like over 500 partners, resource partners. You know, it's the SBDCs, SBA, you know, our local SBA group, the local USDA groups, local economic development folks. So pulling them together. When we designed this, it was really easy to go ahead and push it out through those existing channels. You know, we kind of had the way the program's set up, but there's a little bit more focus on the CDCs just because they're the ones servicing the loan. But that doesn't mean those other groups don't know about the availability of this program. So if they come across a business that can maybe utilize it, they can connect with us or they can connect with another partner to help that business maybe utilize the program. So we were really fortunate that, you know, we already had that existing network here.
That's great.
Or over there, wherever Kansas
So you're
is.
saying that every state probably has somebody that's acting in your capacity? You would think.
Yeah.
Every
Yes.
state has
Yes.
somebody that's acting as what Kansas is. Okay, so why is SBCI unique to other federal credit support programs?
That's a great question.
Flexibility.
Number one.
That's easy.
Yes, because it's extremely flexible. For example, Treasury allows, so at the beginning of this program back in 2010, early 2011, this program really had an emphasis on capital access programs, or CAPS. But CAPS only work if you have, or as we have soon learned, CAPS only work if you have a funded CAP program already in your state, let's say. So many of the states modified their programs out of a CAP program or a capital access program, and they ventured into maybe another program, such as a guarantee program, similar to that of SBA, or a collateral support program, or a loan participation program. So there's 5 categories of programs with SSBCI, but folks, keep in mind there's 150 plus different subcategories of those 5 categories. So it's not like there's a standardized program across the entire portfolio of SSBCI. So it's a gift to all of the states. It's also a challenge for Treasury as far as how do we mitigate risk? How do you answer questions, compliance questions, because every program is unique to itself. So that flexibility is key because, again, going back to the states and you owning this program, you understand what's working in your program. So if you see that a capital access program or a guarantee program isn't working, you can pivot and potentially change into a program that actually suits your local
So to be clear, not every state has every program. You said
Correct.
you had 5 programs, okay?
Correct.
And so in case for other people that are streaming in, how would they find out about what programs the state is involved in?
Excellent question. So with me, I brought our 2013 annual report. So this here is a lot of information, but it speaks to every state. It talks about the allocation amounts. It talks about the funded amounts. It talks about the disbursements amounts. It also talks about the lenders that have utilized SSBCI, and it also identifies the state agencies or contractors that are working in your local, or that are working in that specific state. So this is a gift to you. So I saw some of you looking at this earlier. Please take this home, look at it, share it, because this is great information.
Do you want to give like a one-liner as to each program? Just a one-liner?
To each program?
Yeah, you have the loan participation program? Okay. so
Certainly.
that's-
Okay, so with the capital access program, are you folks aware of capital access program? CAPS, it's basically a loan loss reserve account.
Loan.
So,
And that's, I think
Okay.
that's good for this audience, the loan loss reserve. I
okay.
think I understand that, yes.
With the loan participation program, and I'll go back to that slide, if you will. You have a companion loan, or you may have a purchase participation, similar to what Kansas has.
Yeah, as a former banker, I was very interested in the collateral support program, but I understand these.
Yeah, so a collateral support program, so, in the downturn with the economy, inventory and tangible assets and commercial real estate, your collateral was low. So the collateral support program allows you to bridge that gap and, to actually put a partial CD in your financial institution.
That's right. Okay.
With the loan guarantee program, that's similar to SBA,
Right.
so you can guarantee up to 80%. And then we'll say the cool program, if you will, not saying that all programs aren't cool, but is the venture capital program. So states have the opportunity to design either a direct investment program or a fund of funds program.
Okay, great. Okay.
And I would also just like to add, if you are interested in these and you're looking for them, you may not necessarily be looking for an SSBCI program. Most states have renamed, they call it something else. So like in Kansas, it's our Kansas Capital Multiplier Program. It's either the Capital Loan or Capital Venture Program. Some other states, it's as simple as like the Iowa Small Business Loan Fund. So it may not be as obvious as just going to their website and looking for SSBCI. Because it is customized, everybody kind of renamed it. Or just even incorporated it maybe into an existing program. They're just using these particular funds.
That's right.
To help with that.
And just to echo what Imogene is saying, in the annual report, it does identify the state and the agency. So if you're looking to see if your state has a capital access program or a venture program, you can go to your state and you can see who is actually managing that program for you.
Okay. What are some of the ways SSBCI works with the states on this program? I think you had a meeting in Seattle.
Certainly. No, that's a very good question. So our job, my job specifically, is to provide technical assistance and to provide outreach. And that varies from state to state because everyone's needs is different. So you have to tailor, I have to tailor my responsibility or my action or my outreach to that specific state. Some of the things that Treasury has done as a team, if you will, is we have held national conferences, and we've teamed up with our partners at the Federal Reserve in San Francisco, Dallas, and our last conference, national conference, was actually at the OCC. We have also taken that and we've kind of tweaked it, if you will, and we've had a smaller type of small group discussions or multi-state strategy sessions that were held earlier this year down in Louisiana, so we could identify what some of the challenges were in some of those southern states. Just last week, we had a 19-state, or let's say 16-state, 3-territory SSBCI regional meeting in Seattle. So we invited most of our states from the West Coast plus the territories, including Kansas and Louisiana as well. So we kind of call it the Louisiana Purchase SSBCI regional meeting to actually hear from the states. It gave us an opportunity to actually hear from what's working, what isn't working, what your challenges are in the states. Are you still having issues with marketing this program? Are you able to deploy the funds? So what came out of that was a couple of topics. So states are now trying to understand, how do I keep this an evergreen program? Because once Treasury goes away, or once we go away in 2017, the idea is that we want the states, the contractors, to have had to build capacity. So it's important for us to understand what those needs are for the states and for us to be responsive. So it was a great opportunity to actually hear back from our state managers.
Yeah, and to add on to that, I mean, I think that is maybe one of the differences with this federal program is they allowed this to be a state-driven regional event. So while it's important to, like at a national conference, hear the new compliance standards, hear what the new stuff is going on through Treasury, it was kind of more beneficial in a way for the states to get together and have a discussion about what's working, what's not. Can we share best practices, and just get to know each other. And I think it's helping make this be a successful program across the nation.
And I'm just going to add
Sure.
one small thing to that. The idea here is to collaborate and to build relationships, right? Because we understand if Treasury goes away in 2017, we need the states to be able to operate on their own. So everything that Treasury can do to build capacity for the state managers is our goal until
So it becomes self-sustaining.
Yeah, and it
Right.
kind of helps with the sustainability.
Right.
If maybe we can't go to Treasury anymore, but we can go, oh, hey, South Dakota, I remember they were really good at blank. Well, let's call them up and talk to them about how we can improve that.
That's right.
And that's really helpful, being able to make those connections. And also, talking about the sustainability, that's definitely all the states' goals, including Kansas. The great thing about this, money that we received is, it's helping small businesses. We got millions of dollars. Well, we want, they got to pay that back, hopefully, right? So then we can make it another revolving loan fund. We want to keep this going.
Exactly.
And continue to help the small businesses in Kansas.
Right.
Well, in all the states, but
That's
for me, particularly Kansas.
Exactly. But you're speaking for all the others and all the other states.
Right.
All the other contractors and lenders. Okay, so at this point, let's go ahead and open it up to the audience. We're looking forward to questions. I think you may have a lot of questions. Not very many people knew a lot about SSBCI.
I'm Kelly Edmiston from the Kansas City Fed. I actually had a couple of questions, I guess more for Dave. One was when you put the map up of the distribution of funds to the various states. I'm wondering if, are those allocated to the state? I mean, it's the most populous states that have the most money on the map.
Correct.
So are they allocated on a per capita basis? And what's the
formula?
Decision criteria for that? And then if you, also, I'm sorry, but you mentioned a 10-to-1 leverage ratio, and there may have been some intellectual disconnect with me, my fault, but if you're referring to businesses, that seems like it would make them vulnerable to economic and financial shocks. So would you agree with that, or if you meant something else, could you describe what you meant?
Certainly. So let me talk about the allocation amount and how that was designed. So that was designed by Congress. So it's basically a formula where they looked at the unemployment rate, they looked at the job rates, they looked at the population, and they came up with a formula. So at that time, back in 2010, you can see California received $160 million. So I believe most of the states, as you can see by that lighter green color, received about $13.2 million, including Kansas. I know Missouri received about $26 million. The only state that received less was American Samoa, and they received about $10.3 million. Now, going to your question about leverage. So that leverage question, or that, let me preface it like this. So in the allocation agreement, there's an aspirational goal for the state programs to get to 10-to-1 at the end of the allocation agreement. Okay, right now, Treasury overall, nationwide, I believe we're at about 7-to-1. Kansas, on the other hand, you're at what? You're pretty high up there. I think.
I don't know what it converts to.
But at the
leverage,
end of
but it's like we're only like 5.7% of the total deals with our programs. So, it's a little bit, but it's doing a lot.
So with every deal that comes in with the multiplier, there has to be at least 9%.
Yeah, we'll only be up to 9%. Yeah. Yep.
So they've already taken that into account when they designed their program. So keep this in mind, folks, because every program is unique.
Yeah, that's not how everybody does it.
Exactly.
You know, a lot of them look at more of the total number versus each individual project.
That's true. That's
When they're trying to reach that match, they look at their total deals versus each deal.
Did I answer your question? Yeah. Okay. Ariel.
So from the streaming audience, how do I get started with SSBCI? Who do I contact in my state? Kind of looking for direction there.
Excellent question. So because this is streaming, you do not have the opportunity to actually have one of these annual reports. However, the annual report is on Treasury's website. So you could go to www.treasury.gov, and you could, under the tabs of small business, there is a link to SSBCI where you can find a link to all the states that are participating in SSBCI and our contractors that are supporting those state programs.
I've had a lot of good luck just Googling SSBCI and then the state too. And it'll take you to what you're talking about. So that works too.
Other questions? Nope. Oh, okay.
I'm always interested in the job creation. And, you know, we mentioned 8,250 loans, 100,000 jobs in round numbers. That's about 12 jobs per loan, which seems incredible to me and great. Then when you further look at that, you say, well, 63,000 of those were retained and approximately 33,000 new. I'm curious, I don't assume that this is a lender of last resort program, but would we anticipate that those retained jobs would have been lost if this funding hadn't occurred?
That's an excellent question.
Would the businesses have failed?
That's an excellent question, sir, and I can say I believe so. You know, this program was created out of a response because there needed to be a catalyst. Something else needed to happen in our economy. So what came out of the Small Business Jobs Act were a couple of programs. We have SSBCI that allowed the states to design a program. You also had the Small Business Lending Fund as well. And there was also, I think, some add-ons to SBA also. So I would say so, sir, yes.
Yeah, and I would just add to that, I mean, we definitely have some examples of that, particularly in the rural areas. I mean, if this, you know, if you can't support this business or if this business is, you know, struggling, those jobs are lost. So if you can get somebody else, you know, if they can get the help they need, maybe they're not adding, maybe it's not creating 100 jobs, but, you know, it's keeping those 5, 10, and in those small communities, that is super important, really important. So, you know, it sometimes it seems small on those per project deals, but it can mean a lot, especially in those really small communities.
Right, I've got some facts here that maybe I can read that kind of talks about this. It says, nearly 80% of SSBCI-supported loans and investments were made to businesses with 10 or fewer employees. The proportion of SSBCI-supported loans and investments to small businesses with 50 or fewer employees represents 96% of total number and 72% of total dollars. Nearly 42% of total dollars was at companies less than 5 years old. So I think that's really the goal that it was trying to reach. I think it's
right.
Successful there. Do you have any other questions? Okay, I've got a question here for you. As a former banker, I noticed on your PowerPoint you said something about compliance and data reporting are crucial.
Yes.
It kind of stuck out for me, maybe for some of the other bankers as well. So what were you referring to there?